have to begin with this slew of central bank decisions in the last 24 hours and through the course of this week. What was most important for you when it comes to ultimately deciding your investment strategy moving forward? What stood out?
Well, let me start with the U.S. decision. The markets seem to be caught between two views. One group is focused perhaps too much on the precise timing and pace of the rate cuts that are presumed to be coming sooner or later. And the other is looking at the direction of travel. And I'm in the latter camp. I think the direction of travel is more than certainly pointing south for rates. The different views you can see right in the screen just before I came on when you saw both yields up and equity markets up in the US. As for the rest of the markets you mentioned, particularly in Europe, I think that it's reasonable that you're seeing a bit of a slowdown there. And I think the US, from a high base of peak employment, is probably going to catch up. And it's very encouraging that even with strong employment numbers that you referenced, there's still inflation is still like a good 200 basis points below the Fed funds rate, and that suggests a move downward sooner or later.
So, Tarek, how are you investing and allocating around the idea of 3 rate cuts this year?
Good. So we're generally positioned for a benign environment as it relates to bonds, and that has implications for a different take on duration. Our equity teams are positioning for sectors a little differently, a little less focus on a persistently strong dollar and a view on perpetually weaker emerging market currencies. We invest in emerging markets. We're based in one. And the tide is turning in favor of those beaten down markets, having suffered under the weight of the tightening, the financial restraint led by the U.S.
And it's an interesting view on emerging markets. Yeah. Right. Yeah, sure. Sorry, Tarek, finish your thought. Continue.
I was just going to add, and more specifically as it relates to Middle East markets. Yeah.
Mm-hmm. Mm-hmm.
We're seeing other than the macro drivers led by the Fed that everyone's focused on, and we're certainly focused on that as well. There are structural drivers in this part of the world that are also encouraging. A lot of our clients in the region are looking more inward into keeping money and increasing their allocations within the region. The advent of the Gulf markets, specifically Saudi Arabia, and the turnaround in markets such as our home market in Egypt, which, again, for the reasons mentioned, are seeing an improvement in the balance of payment stresses that defined its currency and debt markets over the past 2 years.
Yeah, I think it's fascinating. I was just going to say it's an interesting view on the emerging markets, and in particular in the Middle East, across the region, where investors are seeing more and more value here, given the run that we've seen globally. So, Tarek, just to round out the conversation, when it comes to equities, when it comes to fixed income, which is your dual primary focuses here, what is the strategy, particularly in equities? Are there any sectors that you like right now? Any other emerging opportunities that you see within these markets, given the current rate dynamic, the macro environment broadly?
Sure. So I alluded to that a little bit. On the equity side, we're bottom-up investors, so we like good companies. We're sector agnostic, but there's as I mentioned, a push a little bit away from more into service sectors, for example. Beneficiaries of an improved consumer in this part of the world, even if there's a slowdown elsewhere, and less focus on exporters, say, for the sake of being in exporters as a way of hedging local currencies, because we're not taking that view as strongly going forward as a broader view on emerging market currencies. So that's an increasing focus on that. And as I said, our fixed income teams are feeling pretty good about duration, obviously selectively and cautiously, but there's an improving outlook certainly in terms of the bonds and fixed income, again, in this part of the world.